So you come across a sign-up bonus from a bank, earn $500 for opening an account and make a direct deposit. That sounds great, right? After all, in my top side hustles video, I talked about how I earned over $14,000 from bank account bonuses. But most of these offers require you to make a direct deposit and you can't for some reason. Maybe you don't work for a company that pays your wages electronically or you're self-employed. No problem, because in this video, I'll show you 3 ways to fake a direct deposit. I'll go over the details and walk you through a real-life example of each method, which are bank and brokerage transfers, business checking account transfers, and TreasuryDirect withdrawals. If you're new here, hi, I'm John, a personal finance geek that's been obsessed about all things related to money since I was a kid. I have a business degree, an MBA, 15 years of corporate experience, and to date have launched 3 successful startups. My friends and family always come to me for tips on how to make more money and save it better, so I thought why not share my knowledge on YouTube so we can all increase our financial IQ. I'm doing this video for free, so if you could please smash the like and subscribe buttons and watch till the end, it would help the YouTube algorithm share this with others. I'm new on here and just reached 100 subs and would love to hit 1K. Let's start off by explaining what a direct deposit is. While the exact definition varies depending on the bank, generally a direct deposit is an electronic deposit of your paycheck or government benefits such as Social Security. Other electronic deposits and person-to-person payments through platforms like Venmo, Cash App, or PayPal are not considered direct deposit. So while the following transfers really belong in other electronic deposits and in theory shouldn't work, they do for certain bonuses because some banks identify it as direct deposit. Let's go over each of the 3 options in detail. The first method is bank transfers and brokerage transfers. This is probably the easiest but riskiest option because it's not really a direct deposit, but some banks are more flexible on what is coded as a direct deposit when it comes to welcome bonuses. In these instances, transfer money electronically from one of your existing bank accounts to your new bank account will count as direct deposit. If you do decide to go this route, be sure you're making a push transfer and not a pull transfer. What's the difference between the two? A push transfer is when you log into one of your existing bank accounts and initiate an electronic funds transfer to your new bank account. You're pushing a deposit to your new bank account. Let's say you want to do the $325 checking account bonus offered by Fifth Third Bank and you have an existing Chase bank account. To do a push transfer, you log into your account at Chase, add your new Fifth Third checking account as one of your external accounts, and then initiate a funds transfer from Chase to Fifth Third. You're pushing money from Chase to Fifth Third. I'm using this example because at the time the video was made, Fifth Third codes Chase Bank push transfers as direct deposit. A pull transfer is when you log into your new bank account and initiate a funds transfer from one of your existing bank accounts. You are pulling a deposit from an existing account to your new account. For all other intents and purposes, there really isn't a difference between the two, but for banks that do code them as direct deposit, only push transfers will trigger the bonus. Brokerage account transfers work in a similar fashion. As the name implies, this is where you withdraw cash from your brokerage account to your new bank account. A few examples of traditional brokerage accounts are Fidelity, Charles Schwab, and E-Trade. Other brokerage accounts that are newer include Robinhood, Webull, and Moomoo. This is just like bank transfers in that it shouldn't count as direct deposit for a bank bonus, but it will in certain instances. Just remember that it needs to be a push transfer, meaning you should log into your brokerage account and initiate a transfer to your new checking account. A real life example is when I recently did the $500 checking account bonus offered by US Bank. It required me to make a direct deposit totaling $10,000 or more within 60 days of account opening. So I opened the US Bank checking account, added the account to my Fidelity brokerage account, and used Fidelity to initiate 3 different transfers of $3,500 each to my US Bank checking account. Sure enough, the $500 bonus posted a month after I completed the direct deposit requirement. The second option is business checking account transfers. This is probably tied with the TreasuryDirect method I'll mention next as the most consistent in counting as direct deposit. Why? Because transferring funds from a business checking account to a personal checking account is similar to how a company pays their employees electronically from the company's bank account to the employee's bank account. Now here's a little secret. Anyone can get a business checking account. You usually need just 2 things. The first is to register your business name with the state. The cost for this varies by state, but in New Hampshire, for example, it's only $100. You don't need to register in the state that you live in, so I probably choose to register in a state that charges a lower fee than the one I currently reside in. The second is an Employee Identification Number, or EIN, which you can get free through the IRS website. Just like we have Social Security numbers, EINs identify each unique business. I'll provide the exact link on where to do this on the IRS website in the description below. Once you complete those 2 items, you can apply for a business bank account. I went with Novo because they don't have monthly fees, minimum balance requirements, or transaction fees. Plus, Novo offers a $40 welcome bonus when you fund the account with $100 or more. My account was approved very quickly, like within 1 or 2 hours of applying. I immediately transferred $100 from one of my existing checking accounts to Novo to grab the $40 welcome bonus. With an account like Novo, you can make a payment to yourself by linking any of your personal checking accounts on Novo. You can add accounts from banks like Capital One, Chase Bank, Bank of America, US Bank, and Wells Fargo. Then just initiate a transfer from Novo to the bank account you added, and that should count as direct deposit. The third way is sending TreasuryDirect withdrawals to your new bank account. TreasuryDirect.gov is the official US government website for buying US-backed securities like savings bonds and Treasury bills directly from the US Treasury. For this video, we're interested in Treasury bills. Treasury bills, or T-bills, are short-term securities as short as 4 weeks that help fund government operations. They're considered extremely safe investments because they are backed by the US government and have extremely low risk of default. T-bills are sold at a discount from their face value and mature at face value. For instance, I bought $600 worth of 4-week T-bills for $597.54. At the end of 4 weeks, the government paid me $600 that I can immediately withdraw back to my bank account. So why do we care about this? Well, remember that a direct deposit is an electronic deposit of your paycheck or government payment. These Treasury Direct Withdrawals are considered government payments. I did a $300 Chase checking account bonus recently, which required me to make a direct deposit of $500 or more. Chase is very strict when it comes to what counts as bank bonus, but Treasury Direct Withdrawals worked in triggering the bonus. I know a lot of people are visual learners, so I'll walk you through how to buy T-bills on Treasury Direct. If you don't have a Treasury Direct account already, go through the registration process to create one. Before you can buy anything, you need to add a new checking account to Treasury Direct. To do this, click on the Account Info tab at the top of the home page. At the bottom of this page is a link labeled Bank Information. Click on that to manage your bank accounts. Once your bank account has been added, it's time to buy T-bills. Click on Buy Direct tab, then select Bills as the security you want to purchase, and then press Submit. On the next screen, choose one of the 4-week products. I usually pick the one at the very top because it's the one that will be issued earliest. At the bottom, type in how much you want to purchase in $100 increments and which bank account you want to pay from. Leave the scheduled investment to No. Finally, and most importantly, is to select where you want the payment to be sent to after the T-bill matures. This should be the bank account that offers the bonus. Then click Submit and then click Submit again on the next screen to confirm your purchase. You should receive an on-screen confirmation indicating your request has been processed. You'll receive an email confirming your purchase and be provided with a transaction summary. Your payment will typically be settled the next day. At maturity, the yield from your T-bill will be automatically deposited to your linked bank account. Overall, if you're not able to receive a direct deposit, I lean towards doing a business bank account transfer or Treasury Direct Withdrawal to trigger the bonus. But if you're adamant about a bank or brokerage transfer, I include links to all the resources you'd be interested in below. I hope this video was helpful. If so, please like and subscribe to keep learning more ways to maximize your finances. And remember, knowledge is incremental. Start small, think big. Thanks for watching, and I'll see you next time.